Hello and welcome, everyone. It's a pleasure to be here, and thank you very much to the three institutions for the invitation and for the organization of this very timely event. Over the next 2 days, we will be talking about capital markets in Europe, ESG, climate change, hearing about oceans. So in our talk today, we will be setting the scene for all of these with a high-level policy dialogue, and we have an excellent panel of 3 speakers who really need no introduction. But very briefly, we have joining us virtually Johannes Hahn, Commissioner in the European Commission responsible for budget and administration, who is overseeing the work of borrowing to finance the recovery under the flagship 800 billion euro recovery program, as well as programs of finance to third countries, including Ukraine. And here with us in the room, we have Klaus Regling, Managing Director of the European Stability Mechanism, that helps Euro countries avoid and overcome financial crisis. And we also have with us Ricardo Mourinho, Vice President of the European Investment Bank since October 2020, who oversees the bank's funding and treasury, economic analysis and research activities, as well as lending operations supporting the blue economy and the EU programs in context of the European Green Deal. So thank you very much to all 3 of you. So we're having this session at a very timely moment for Europe. We've just exited a pandemic crisis. There was a lot of optimism back in November around the time of COP26, of the world coming together and addressing the climate crisis that we're facing next. But somehow in the middle, we decided to throw another crisis, and that is the conflict in Ukraine and an energy crisis and inflation as well. So let me start by inviting each of you to reflect a little bit on the moment Europe finds itself in, and what are the biggest challenges and opportunities for the continent in this context. Mr. Hahn, over to you first.
Yeah, thank you. Thank you for the invitation. And first, I have to excuse myself as I'm not there in person, but the reason was simply that today we had a first very comprehensive debate amongst commissioners about our position concerning a possible candidate status for Ukraine, Moldova and Georgia, and that's why I was not able to come to Luxembourg, or at least not in time. This was the reason, and this leads us immediately to the challenges we are facing. Of course, as you rightly said, we were just quasi towards the end of the tunnel concerning the pandemic, and now we are confronted with the war in Ukraine, which puts another pressure on us. So far, we were used that there were a couple of years between different major crises, but now crises are overlapping in a way. And last year, we saw already the recovery of the European economy earlier than expected, but now, of course, the war is slowing down this process, and of course, we are still confident that towards the end of the year we have still a modest but still a growth rate, and this is what should be and must be our focus. But of course, we are facing a lot of headwind, may I say so. It's the inflation, you said rightly, energy crisis, this eruption of supply chain. All this is having a huge impact. There might be, or it is rather realistic, a food security crisis in some parts of the world, in particular Africa, which also might trigger some problems for us, the Europeans. But finally, I think the assessment is again, we managed to weather each of the crises, and I'm still confident. And I think apparently the markets are also confident, because if I look at our issuances, even after the beginning of the war, they were still very much oversubscribed, and we will fulfill, by the way, our announcement to issue around 50 billion in the first half of the year, and a similar magnitude in the second half of the year. And again, the markets, even on the interest, we see some so to say, additional pressure. the markets are still confident what concerns the European Union and its ability to deal with this crisis and not only to recover but also to be resilient enough indeed to also take this challenge and turn it into something positive.
Thank you. And you've mentioned the markets just now. Mr. Regling, what moment do the markets find themselves in now and in the context of Europe as challenges and opportunities in these crises?
Well, today is a difficult day in the markets, but let me also, in this first panel, take a somewhat broader view. There are problems in Europe, but I think it's important to realize that these are global problems. Jeremy also made this point very much. And there are some new problems, and there are some old problems, and some very old problems that we need to deal with in Europe, but also globally. Of course, the war in Ukraine has a terrible humanitarian consequences for people in Ukraine, but it also leads to even higher inflation rates, to higher food prices, to food shortages, and particularly in many developing countries, actually hunger, which is something that we have not seen in a long time. We continue to face the problem of climate change, again, globally and in Europe. And we have to deal with the economic consequences of demographic changes, demographic trends. And this will create costs for pension system, healthcare. Again, a global problem. Even China is going to feel it. But again, very much a European problem. So we have new problems, we have old problems, and they interact and make life difficult. But it's Europe within the world, and we all hang together. Now, looking at that, how can Europe cope with these? Jean Lemire said Europe is back. I think there's confidence around the world that we are able to tackle these problems. Much more, just no comparison to what I experienced 10, 12 years ago during the Euro crisis, when there were serious doubts in the world that Europe was able to deal with these problems. And I think the way we got out of the Euro crisis was one important step for Europe to come back. But more broadly, I think Europe is seen as an anchor of stability in the world. We have the biggest single market in the world. The rule of law is beyond any doubt part of Europe very much. We in Europe believe in multilateral cooperation, I think more than anybody else. We practice it in the European Union every day anyway, so we have also more experience than other countries. And I think the global problems can only be solved through multilateral cooperation. So we have a comparative advantage here. We are open, more open than other economic blocs or large countries. And when people talk now about friendshoring, I think in Europe, again, we have a comparative advantage because we can do it without necessarily going to your own country. If a company, let's say in France, wants to bring production back to Europe, they don't have to go to France. They can go to Portugal or Greece or Austria, or there are many possibilities. So we will continue to have a multilateral approach also there. Then we are at the forefront of climate change. Colleen talked about that. And let me also emphasize some broader points where Europe, I think, is in a better situation, not a perfect, but better than other large countries. Income and wealth distribution in Europe has deteriorated the last 10 years, but it's much better than in China or the United States. This is important for the social fabric. So I think we have some very important points in our favor that should help us to tackle these problems that I mentioned in the beginning, which are global problems, also European problems, but I think we have created good conditions to deal with them.
Thank you. So difference and diversity making Europe stronger, and the experience of crisis becoming a comparative advantage in solving global problems. Very good. We'll go very much more into depth in these in the discussion, but over to you, Vice President Mourinho. How do you see Europe's role? We heard about Europe's place in the world. A lot of these challenges are global in terms of the challenges and opportunities in the moment we find ourselves in.
Well, thank you very much, Danae. And let me tell you, that's a great pleasure to be here and to apologize in the name of President Hoyer that was not able to join you today. Let me start to say that, well, Europe is the proof of that says that what doesn't kill you makes you stronger. We have the economic and financial crisis, and 4 years after, we set up the ESM. Then it comes the COVID, and 4 months after, we set up economic rescue package with the Commission, with the ESM, and with the EIB. And then now we have the Russia invasion of Ukraine. And after 4 days, us and the Commission managed to extend a solidarity package of 700 million in 4 days. So it's this determination and this speed that shows that, as Jean-Luc Premier has said, that Europe is back. Europe is back, is fit for the job, and is resilient, coordinated, and is cooperating and showing how cooperation in this environment that we created in the post-war period is working and is resilient against the expectations of many, not more than 1 decade ago. So the EIB group has been present in these different episodes. We have launched DGF in the early days of the COVID crisis. We have supported healthcare sector, and BioNTech was financed by us. We have been involved and being with the Commission at the steering of COVAX initiative that deployed vaccination for more than 800 million people in low-income countries. And now we have the war in Russia, and as Klaus just said, those that think or that consider, mainly outside you, that this is a regional conflict are completely mistaken. This is not a regional conflict. Of course, there's a regional dimension with the poor people that is suffering in Ukraine and with the neighboring countries that are being generous in terms of getting the flow of refugees from Ukraine. But what is at risk is the way the global economy was organized in the post-war and in the post-Cold War period, where we integrated more and we globalized. And what this war puts at risk is our international division of labor, the way we organize, and that has produced so much welfare over this last 3 or 4 decades. And that's what is at risk. We have hunger back. And for the first time, it's not only that we have hunger back, it's that for the first time, hunger is being used as a massive destruction weapon, is being used as a threat to the world by the way the war is being conducted by the aggressor, by Russia. So this comes on the top of the challenges related to climate crisis and the need to fight against climate crisis. And if anything, what the war shows is that what has been a priority of Europe over the last decade, in fact, is now a priority and an emergency. We have an emergency on top, and we need to deliver. And I would say that Europe is prepared to step up to his leadership and his leadership role to do with this. Europe is prepared to have a quantum leap, to be back, and to deploy the appropriate investments in technological leadership. Europe is a leader in clean and green technologies, more patents than US or China, but of course digitalization is key to keep this leadership alive. We need, of course, to invest in energy security through renewable energy, but also energy efficiency. And of course, this is something that we learned in the early days of COVID, but that is becoming more and more evident, the need for open strategic autonomy, meaning that Europe needs to be resilient, to diversify its production, diversify suppliers, diversify customers, so that Europe can live to the role it must have in the world economy.
Thank you. You mentioned Europe's quick reaction to crisis, and I'd like to turn to Commissioner Hahn now, specifically on the preparation of the recovery package, this was widely seen as a key positive moment in the history of the European project. Do you agree with this assessment? Is Europe turning a corner after its recent history of sovereign debt crisis and existential threats of the past decade? And you're very close to seeing the plans submitted by the member states. How confident are you that this is really a game changer in terms of changing Europe? We heard in the fireside chat earlier about transport infrastructure in Europe and trains between Paris and Luxembourg, but we still have a long way to go to build greener, cleaner infrastructure to connect Europe. Looking at all these plans, is the recovery package going to be a game changer?
Well, on substance also, and also on speed. In both cases, I would say we have achieved something extraordinary because we managed to create next generation EU within actually weeks, and it was also adopted within weeks or altogether finally within months. So I think the previous crisis, Klaus Regling is a witness. It took us years to react, but now it was only about weeks, and I think in that respect Europe has learned its lesson, not only about the necessary speed, but also on the substance. So it's not only, and it was not only about the recovery of Europe, but also to make it more resilient, not expecting that we are facing immediately a new crisis. But I think already the political priorities we have defined at the beginning of the von der Leyen Commission, the green transition and digitalization, have been confirmed quasi by the pandemic. But in particular, green transition has seen a further boost due to the Russian aggression in Ukraine, because it's also about our vulnerability on gas and oil from one supplier, which we have to change, which we have known before, but now there is a common understanding amongst the member states that this has to be done. And I'm confident that also political leaders have learned their lessons in a way which every manager has to learn and to respect, and this is trying to have a proper risk sharing to avoid dependency on one customer, of one legal entity, of one supplier whatsoever, or to be over proportionate depending on one of these so to say players in a business. And the same applies for politics, for states. And I think in this respect, the past couple of years have been a game changer also in the way that we understand that we have to care about ourselves. Of course, now, in particular, the situation with Russia in Ukraine has again reinforced the transatlantic relationship, and this is good, this is important, but nevertheless we understand that we have to care about ourselves, and this is why, for instance, member states have now decided and already adopted necessary decisions to invest significantly more in their defense expenditures, in their defense budgets, but also to work more together at the European level, because if you count together our defense budget, we are not spending so less, quite the opposite. But if you look at the efficiency of European or member states' armies, I think one doesn't need to be a military expert. We are far away from a kind of relevance or effectiveness we should be according to the money we are investing. So here cooperation is necessary, but this is another element, another reaction to the experiences we have, may I say, unfortunately gained in the past couple of weeks or months. And Here I see clearly that the European Union is making a lot of progress in terms of, I wouldn't say further integration, but joint understanding that in such a global setting, a very strong and determined cooperation amongst member states is definitely necessary indeed to spearhead what Klaus Regling has said, so to say, cooperation amongst member states based on rules, agreements, contracts, treaties, what we call usually multilateralism. And this is something which other countries in the world expect that Europe is going ahead. And this is also our obligation, our duty, but also our interest. If we are there in the lead, we can shape a lot how at least the democratic part of the world is looking in the future.
Thank you. Another comparative advantage, perhaps, to add to your list in terms of the defense and pooling and efficiency. But we heard before about overusing the word unprecedented, and another overused word is crisis. And you're no stranger to crisis in your capacity since the start of the ESM. The pandemic also tested the European institutions. We had in the beginning all the drama about using the ESM facilities, the perhaps concerns around stigma associated with that. It was a big test moment, but you also had a lot of innovation in terms of issuing the pandemic bonds, the social bonds. So there was a lot of change as well. Do you think ultimately this experience weakened or strengthened the system? And if so, how?
I think the theme of everybody who speaks here, also the previous fireside chat, is that we have seen a tremendous development over the last 10, 15 years. Every crisis we learn how to do things better. By the way, we were not that slow, Commissioner Hahn. You always say you are faster now. During the Euro crisis, the EFSF issued bonds 7 months after its creation to help either finance the Irish program. So that was also very, very fast. But of course, it was easier for us. We only had to deal with 5 countries. But we learn from every crisis. Clearly, as a result of the Euro crisis, many new institutions were created. So I call the last decade really the decade of new institutions in Europe. It's not only the ESM, there's also the SSM, of course. Jean talked about that. There's the SRB, there's also EBA, IOPA. So a lot of progress on the institutional side. And that was not only important to deal with the Euro crisis, it also helps us a lot during the current crisis, because these institutions are fully functioning and they are helpful to find the right answer to this crisis. Then with the pandemic, of course, it was a breakthrough. The Next Generation EU is important. It was a very impressive response to the crisis, and before that, also SURE and what the EIB did and the ESM on a smaller scale. This continues to help us also now to deal with the economic consequences of the war in Ukraine, because the money under Next Generation EU is dispersed over 5 years. It promotes reforms and investment. So it's ideal also as a response to the current problems, although it was designed in response to the pandemic. So I think one can really say we are getting better from crisis to crisis. We would prefer not to have so many crises, but given that we have to live with them, and it's not only Europe, it's the world, I think we are doing the right things, and that makes Europe stronger in the end, because we will live with this experience, with the new institutions, and that will help us also to deal with whatever happens next, because we know there will be another crisis one day. I don't know when, I don't know where it will come from, but everything we are doing now will also help us to deal with those. And the final important point, I should have mentioned it earlier, that is crucial with our crisis responses, that Next Generation EU and SURE, and the other programs were all designed to help those countries more that were hit more by the pandemic, that had more negative consequences from the pandemic. So they benefited more than other countries from, and will continue to benefit more from Next Generation EU. And I think that's also a very important element. Solidarity was extended at the right moment. We have always had some important solidarity in the European Union since its creation in 1957 through the EU budget. There's solidarity every year, and that has led to convergence over the last 60 years already, and that is continuing. Also, the lending from the EIB has a high degree of solidarity. The lending from the ESM during the Euro crisis provided a lot of money to countries in need. Now it's happening with Next Generation EU. So there's the underlying continuous solidarity, but then when a crisis hits, there are special efforts made, and that really keeps Europe together, helps to protect the single market and also the functioning of the monetary union.
Thank you. So a brand change for Europe, being seen by the world for very long as the crisis continent, now maybe the combating, the caring, and the converging continent, converging internally, combating the crisis and caring for the environment and for its neighbors. And let me turn to you, Vice President Mourinho, now on the Ukraine crisis, because it didn't take very long for the continent to be tested again, this time with a conflict at its doorstep, an unfolding energy crisis. You've been very close to this with the preparation of the solidarity package for Ukraine. What do you expect the impact of that to be? And thinking about the energy crisis as well, what have been the lessons for Europe? Has this been just bad luck? Has it been bad energy policies? What can we learn from this? Is this an opportunity to accelerate the green transition?
Well, thank you very much. Starting by the first question on Ukraine. On Ukraine, in fact, as already alluded to, us and the Commission together, we have been able to provide liquidity assistance to Ukraine in a question of days, and it was disbursed in 1 month. So we're the first financial institution to do it. Now we look ahead, and 1 month ago we have approved a package of 4 billion euros to support the EU member states that are hosting the people fleeing from the war, to develop the infrastructure so that refugees and the host communities can live and live in adequate conditions with this huge flow of refugees. And now we need to look ahead. We need to look at after the war, but when peace comes and we have the possibility to start rebuilding Ukraine. It's already started in some minimal dimension, but we need to rebuild large part of that country. And we are engaged. We are engaged currently on discussing the Rebuild Ukraine facility so that we can quickly, after the peace comes, to start rebuilding a country that needs to rebuild, to be set their way to return to a normal life as part of a peaceful Europe. Turning to the question on the energy crisis. So the war, in a sense, was a wake-up call to address strategic gaps in Europe. And of course, that the most urgent is to become independent of a Russian energy supply, and this must be done as quickly as possible. But the only way to be, in fact, resilient is by building enough renewable energy and energy efficiency so that we can not depend not only on Russian gas and oil, but not being dependent at all on fossil fuels. So there are two reasons to do this now. One is the climate, is the structural one, but then there is a question of strategic autonomy that also becomes very clear. And this will take massive investments in new technologies. Only half of the technologies that will allow us to move to a zero carbon exist already today. So this means that the other half needs to be still put in place and needs to be not only invented, but scaled up to a stage that it can be used. We need green infrastructures, and we need to build these infrastructures such that they are maybe not today ready for green low carbon gases, but that they can be adapted Because if we simply build infrastructures for natural gas, we are solving maybe some short-term problems, but at the cost of a longer-term future, and we are creating stranded assets that will not be fully used. And the key challenge is how to mobilize the financial resources for this. If interest rates will return to a more normal with the normalization of the monetary policy stance, and with debt levels that are quite elevated after the pandemic crisis and now with other crises on the top, and the EIB will play a part in this. One example is the green bonds. So the green bonds, the volume of financing green bonds increased dramatically. So we started, EIB, in 2007. And today the market of green bonds was $1 trillion. Well, it might seem a lot, but given that the size of the market is $120 trillion of debt, there's still a long way to go and a large margin to keep growing faster on green bonds and financing the green transition.
Thank you, and we'll hear a lot about this in the coming 2 days on green bonds and the European sustainable capital markets. We've spoken about crisis, we've spoken about the moment we're in now, but we are also in an inflection point in terms of longer-term shifts, both in the economic environment, in geopolitics, and in our natural environment. Starting with the economy, Mr. Regling, we're recovering from the pandemic when it comes to health, but the economy is shifting in various ways. We heard earlier about inflation rising, interest rates rising, the central banks reacting. Of course, still quite a long way to go from where interest rates have been very low for very long, but also higher debt servicing costs. How is this affecting the investment landscape and competition among assets now that returns are rising for assets that have been traditionally very low before? How do you see the outlook for European assets in this environment for our investors in the room?
Yes, thank you. Indeed, I think we are at an inflection point. Inflection points are always difficult, but I think we are in a particular difficult situation because on the one hand, we were coming out of the pandemic with a very strong growth momentum. Growth was in Europe, but also in other parts of the world, very strong till the 24th of February this year. And it looked like we would really return to the pre-pandemic activity levels in the course of this year in all EU member states. And then the war happened, and that made some of the trends that we already saw. Inflation was already creeping up before the 24th of February, but now all that is intensified, the food shortages, the energy prices, and we don't know exactly where the end of these trends will be. So a very special situation, and we don't really have experience with a combination of these factors. This has not happened before, that on the one hand, strong growth momentum, then a war, and coming at the same time from a very long period of extremely low interest rates, which are normalizing now, and normalizing does not mean being restrictive for a long time, because with the rise in inflation, real interest rates right now are actually lower than a year ago, because inflation has gone up faster than the interest rates, and this is not only Europe, this is basically around the world. Investors are adjusting to that. They have to do it, and we know that adjustments of this magnitude are never smooth. We also know that markets tend to overreact. Often they underreact, they undershoot, then they overshoot. This is all part of the market reality, and we see what will happen now. We know that Friday and today are very difficult days in the markets because investors are reacting to the new environment. And as Jean Lemire said very correctly earlier, that's also what central banks want. Central banks want investors and market participants to behave differently in the future compared to how they behaved in the past. What I see in particular for Europe, looking at assets, different asset classes, when we talk to our investors in Asia, we clearly hear that they are coming back now because many of the big investors, particularly central banks, sovereign wealth funds, they just refuse to buy assets with a negative yield. That's why they did not buy our bonds for a while. Now that yields are positive again, they are coming back. So that is a clear change in behavior. On the debt servicing problems, I don't see that in our countries for quite a while not to be a problem really, because one should not only look at debt levels or debt to GDP ratios. What is important, what is a real burden for an economy and for national budgets is the interest payments that countries have to do on their public debt. And looking at the numbers, the situation is very clear. All our member states have the lowest interest burden on their public debt since World War II at least. And before that, we don't have very good numbers. For all our countries, interest payments from their budget in terms of GDP is about 1/3 or less what it was 10 years ago. And on top of that, most countries have used the last few years of low interest rates to lengthen considerably the maturity of public debt. It's now average around 8 years. So all interest increases that might be happening now will need quite a number of years to show up fully. So that's why all the talk, and I see a lot of that in the media, about a new debt crisis, I think is completely exaggerated. It does not mean that countries with high debt ratios should not be careful about the long term, because in the long term, on the one hand, there will be another crisis, as I already mentioned, always good to remember that. And we, I think, have learned also the last two crises that it is very important for governments to have sufficient fiscal space to react, to be able to react to a crisis. That's one reason why countries with high debt ratios should look at their consolidation path. And also, we know that all our countries will face additional costs from demographic trends, aging, higher pension costs, higher healthcare costs. So countries have to be careful, but that's very different from saying there will be a debt crisis the next few years because interest rates are rising.
Thank you, very clear message. So don't worry, but be careful. Back to Commissioner Hahn, we spoke about the economic shifts, but geopolitics are also shifting. We had a period of close global cooperation to address the COVID pandemic and also the climate crisis at the time of the COP26 in Glasgow. But now we're back into a period of tensions between the US and China, the conflict between Russia and Ukraine. What is Europe's role in all of this, and what do you see as the biggest geopolitical risks for markets?
First, I would also comment on what Klaus Regling just said, because I fully subscribe to his assessment, and I would only like to add, this is why we have our recovery and resilience facility also based on country-specific recommendations, which we have agreed with our member states over the years. And here we clearly want to see our member states making the necessary reforms to become more attractive also for investors, to enable themselves to further grow, because I fully subscribe that there won't be a debt risk, so to say, in the next couple of years, but indeed we have to be prudent, we have to prepare ourselves, and this is why addressing the debt level in principle is something important also in order to give us or to give member states, in case there's a new crisis, wherever and whenever it will happen, the necessary financial firepower to react properly and as fast as possible. So I think this is something we should keep in mind. Recovery and resilience facility means also to protect, to prepare our member states better, and this also includes to improve their debt level. But of course, this is something we are just discussing with them and trying to see what is the future of the famous Growth and Stability Pact. To your question, I think the role of the European Union is indeed to be the advocate and the leader of multilateralism so say at the global stage. There is an expectation that we are leading this process, that we are, so to say, pushing it, and we have done it in a specific but extremely important area. This is on climate change. The Paris Accord would not have been possible without the engagement of us, the Europeans, also ahead of Paris. I remember my then colleague, the Commissioner for Environment, traveled to more than 90 countries in order to prepare the event in Paris. And this is exactly what we can afford. Second, I think you have described this growing tension between China and the US. I think it's clear that where we are, if it's about values, democratic values, but if it's about the economic situation, we have to be clear, they are all competitors. And the lesson we have learned painfully just recently is definitely to be dependent in certain areas, and we have to make now and we have done already the necessary risk assessment, and this is, I think, one of the most important lessons we should have learned to work more on what we call strategic autonomy. Of course, we cannot and will not produce everything in Europe, but we have to look into the different supply chains, and if we can also diversify here, for instance, one or the other supply risk. Not everything is possible. If we are depending on certain rare earth, they are unfortunately only available in one or two countries, and here we are depending, but we can address, and we do so already, for instance, with our Horizon Europe program, by creating specific research programs working on further efficiency gains for certain technologies in order to reduce the need of raw materials or to find substitutions, replacements for certain materials. This is something where we are trying to invest now much more than maybe in the past, or we will very soon adopt a communication about circular economy. If we manage to recycle our waste, to save raw materials, it's another contribution to make us less vulnerable in terms of getting certain rare materials or whatsoever from other parts of the world. So there are different areas and puzzles where we have to look into it and to address it, but everything together will definitely lead to, so to say, more sovereignty, a better, therefore, political standing in the world. And may I say, I was a couple of weeks ago in Japan and South Korea, and I was, may I say, pleased to hear that we have seen as the leaders of the democratic world in reacting to the aggressive war of Russia by imposing first sanctions. And it was possible because we started to prepare possible sanctions already in October, because we had the feeling something will happen. Unfortunately, we were right, but we were prepared. And also this is a proof of the lessons we have learned from the past. We are less naive than it was certainly the case a couple of years ago.
Thank you very much. And finally, the natural environment is also shifting. We heard about the economics, the geopolitics, preparing, global relations. But the climate crisis is now something that is very much at the heart of Europe as well. It's not something that's happening at faraway countries in the global south. We had wildfires in Portugal, in Greece. We had floods in Western Europe. And there has been a lot of progress since COP26, but the IPCC report, scientists are arguing that we need to do even more. What do you see the role of the EIB as a pioneer in sustainable finance, issuing the first green bond? You spoke about the green bond market before. How can it continue to lead by example in this space?
Well, as Commissioner Hahn said to a previous question, if the pandemic was a wake-up call for digitalization, this invasion of Ukraine is a call for faster green transition. That's how we take it. So our twin calls for twin objectives to twin priorities. And I'll come back then to green bonds. And in fact, in green bonds, this year marks the 15th anniversary of the green bonds. And I had the pleasure last year to celebrate in the Luxembourg Stock Exchange the issuance of the 1000th green bond. So it was quite a landmark. At EIB, 15 years and 50 billions after, we keep issuing green bonds more and more. They are now 27% of our funding is raised through green bonds, and this year we have started issuing climate awareness bonds, so our green bond in the format of the area reference note. So this is a step forward in bringing kind of a benchmark to the market. That is a green bond benchmark. And we are the largest issuer of among the multilateral development banks. Then on Next Generation EU, the large part of the important part of green investment that is there made the Commission also a big issuer of green bonds. And this is a market that is growing day after day. And this issuance by the Commission is also very important for the countries. Many of them were not issuing yet green bonds, but after Next Generation EU, I would say that most of them will be prepared and have the appropriate way of budgeting and controlling so that they can start also tapping the green bond market. That said, the green bond market, as any market, is an institution. And an institution depends essentially on rules, transparency, and credibility. And that's a key issue for any market. And for the green bond market, this is a very sensitive issue. And that's the reason why we need one book of clear and transparent rules. People may criticize the taxonomy. Whatever we think about the taxonomy, there must be one taxonomy. Being this or whatever taxonomy, there must be one taxonomy. We cannot live with 50 shades of green. We need to have one shade of green that we know what is green, what is not green, and such that the market is credible. And that's the key thing, because if the market is credible, the investors will start tapping more and more the market as they see the opportunities, as they see that their returns are safe and that the securities are credible. That's pretty much on our funding side. On our origination side, other example is the risk-sharing product. So developing risk-sharing instruments, I think, is at the heart of a public policy bank. I used to say that public policy bank have two distinctive features vis-a-vis other banks or commercial banks. The first one is patience. We have a lot of patience because we have public entities. Our shareholders are the member states, and they are not after us for the dividend of the next year. And this allows us to extend funding at long periods and be patient enough to wait for the returns. And this is what is needed for innovation. The second thing is risk-bearing capacity, the ability to share risk and to go with projects that are quite risky for the private sector, that the private sector by itself would not put their money in because they are simply too risky, and take a small portion of risk such that the residual risk is compatible with the risk appetite by the markets. And that's a second very important feature. And that's how you bring projects that are cutting edge in terms of innovation. If you think about the projects related to floating offshore wind, or if you think about green hydrogen, or if you think about projects related with recycling. All these projects are simply too risky for the private sector to take the whole risk. What we do is by putting a bit of public resources to share the risk and to crowd in a lot of private money. And that's leveraging, in the good sense of the word, of bringing private resources that leverage the public resources to an amount that is not possible if we are simply based on private funding or on fully funding through the public sector. So the public sector will not have enough resources. If we think that the green transition is a public sector issue, we will not succeed. We are totally wrong. We need to bring the private sector and work with the private sector and market-based instruments that harness the full range of creativity that is in the private sector with a small amount of public funds. That's how we see the market development.
Thank you very much, Vice President Mourinho. Thank you to all of our speakers. I think you've done a good job of setting the scene, but also making a difficult job for the rest of the speakers, because you've set a vision of Europe recovering from crisis, being stronger, working better together with the private sector, with other institutions, with the world. The question we'd like to pose to the next sessions is for the investors looking at Europe in the coming years, what should they be looking at to indeed test that this is the vision of Europe that is going to dominate and that is carrying forward. So thank you very much to all of our speakers, and thank you to everyone.